Okay, welcome everyone. I've got two screens, so I'm looking there, I'm looking here, that's my screen. Welcome everyone, and thank you very much for joining me. I hope you can hear me okay, the sound is good, and you can see me, and obviously see the slide deck, which is obviously with today's title, which is Surviving December Volatility in the Forex market. So good evening, Abdul. Thank you very much. And I'm also in London this evening, so thank you very much. And good to know you're here. I'm very curious if any of you are elsewhere in the world. Please let me know. I'm always interested just to see where everyone is tuning in from. So there's a risk disclaimer. We're going to go for the next hour. And there is a risk disclaimer, and I'm obviously just going to give you an opportunity to read it while I give you some background behind myself. You might not know who I am. I am one of the traders and analysts with Trade with Precision, and I am based in the city of London. I'm a day trader, so for most of my income, I trade the markets, usually on the 15 minutes up to 1 hour, maybe 4 hour timeframes. For my stock portfolio, that's a different thing. Then usually I'll be looking at entries on the daily and weekly. Okay, what else? I'm interested in currencies, I'm interested in commodities, and of course interested in indices for the day-to-day stuff. That usually provides me with some good opportunity. And so hopefully tonight we get a chance to have a look at all of those in enough kind of detail. I also feel like I'm fighting off a cold. So sorry, I'm just going to quickly blow my nose. Sorry about that. I feel like I'm just fighting off a cold, and I was fine until I started talking. So on the agenda today, we're going to be talking about the price movements of euro dollar versus dollar yen versus cable. So cable is the nickname we give to sterling against the US dollar, and obviously a few others. We're going to talk about finding trends, patterns, and potential trades throughout December. All right, we're going to do some analysis across multiple timeframes on the platform. So I do have both. I have both platforms here, just so you can see. Obviously, I've got the CT Trader one is here as well, but most people are using the MT5, so I'll probably just go through that. It's probably better because the majority of people are using it. So first of all, and again, how many of you have actually sat in on my webinars before? I recognize a couple of names, but how many of you have sat in on my webinars before? We'll have a look. Quick exercise. My laptop is desktop is making quite a bit of noise. Not sure why. Okay. So right. So the reason I asked was because I don't want to repeat myself too often. Thank you, Godwin. Yeah. I don't want to repeat myself too often. Repetition is a good thing. Repetition of concepts and ideas is very good in terms of just something might not mean something to you now, but down the line it does, because I say it over and over again. Eventually, you have to say it 10 different ways so that it means something to people. So that's pretty normal. But at the same time, I also don't want to feel like I'm boring people with the same stuff. So first of all, we'll start with a couple of big things that that I wasn't aware of. So if you come sort of from a non-financial, most people come from sort of a non-financial educated background. We're not all accountants, so we haven't gone through programs necessarily to really understand economics. But here's a couple of really broad overview things that we need to be aware of. And the main one is that the US economy is really the biggest. It's just so absolutely gargantuan and there was a period when China was catching up, except if you look at the two economies right now, the two GDPs, China is actually in real trouble. The US is not necessarily in the same position. The US is actually looking relatively healthy, whereas China is really overstretched and is struggling. There's some potential serious stuff going on. And if you exclude China, the US's GDP is greater than the next 8 countries combined. So that includes the whole of Europe, the whole of the UK, Japan, like a whole string of other countries, and it's just bigger than all of them put together. So it is without a doubt still the wealthiest country in the world, and the US dollar is not just in currencies, it's in commodities, it's in gold, silver, crude oil, it's in the US indices. So If you think about in the S&P 500, that has got a whole lot of companies listed that we all know. So that's got Starbucks, Nike, Disney, it's got Amazon. It's got all these companies listed that are also global. They're in every other country. McDonald's, so they're in every other country around the world. And so because of that, the dollar effectively is kind of, its roots are just everywhere. And so we need to, so I never really used to appreciate that. I used to just see the dollar as like one particular currency, and then you had your other currencies. But when you start to realize that the US dollar is kind of, this is an exaggeration, but it's kind of like half the planet. So when you kind of look at it from that perspective, you realize that what you need to do is, first of all, let's assess what's happening with the US dollar before we do anything else. Now I say that because it doesn't just impact currencies, but if you look at commodities and if you look at the indices, and therefore if you look at cryptos and you look at equities, they're all impacted by the US dollar. So the very most sort of straightforward way to give you an example of this is, if we look over the last year, we have seen, this is important because this creates a foundation for what we're going to be doing next. I don't know why I'm so blocked up. This is annoying. Anyway, I wasn't that blocked up like 10 minutes ago. Okay. So we need an awareness of what's caused that. Now we've had moves in the past. So I was around when we had this move. It was actually a really big move. It had been happening for a while, but it was a concerted move. And we actually had a similar one now where this is effectively that dollar has been driving it. And part of that comes from fears of inflation, and then the Russia invading Ukraine, and then obviously fears of recession. So basically a bit of some of that fear-driven stuff. And so we could see when we look at other pairs, we could see exactly the same move that happened. And this one actually impacted the UK a little bit more for other reasons. And then if we look at obviously a few others, we look at dollar yen, we had a very, very big move to the upside there. If we look at gold, gold had experienced quite a big move to the downside. We then want to have a little bit of a look at crude oil. Crude oil also had a little bit of a move on the tail end. So this was the invasion of Russia, getting into Russia invading Ukraine, and then we could kind of see where we've been since then. But then you start to look at equities, and you can see here that this period where that dollar has been moving is obviously quite strong. Especially when we move across and have a look at tech stocks, we can see a big move down. So it's really there. We look at cryptos. So you go to cryptos and you can see a very similar move on that side as well. So big move to the downside on cryptos. You look at Apple. Okay, Apple doesn't do that very well. Let's look at Tesla. Tesla's had a big move down. Microsoft, even Microsoft has had a big move down. And that has been, so explaining where it comes from, it's just tied together. That is watching how the US dollar, when it is moving, that it impacts everything. So does it do that all the time? No. In the 14 years that I have been trading, I have seen it move for a very long sustained period like that twice. And this was the first time I saw it happen, which was this period over here from 2014. In 2014. That was the last time I saw that happen. And it doesn't do it very often. And it, so in between that, it just sort of does its own thing. It can strengthen or weaken, it can do all kinds of things. But when there's a bit of panic or a bit of unrest, it's very quick to see that start to come to the foreground. So the other thing that's going to happen is that when the markets calm down, it's going to go away to a large degree. It's going to go away. So this is important, because if anyone has started engaging in the financial markets from 2020 until now, they might be under the impression that this is how it always operates, and it's not how it always operates. As soon as the market calms down, probably added to that if Russia-Ukraine thing is resolved, we're going to see everything start to split up. We'll see maybe gold will go up, and then oil will go down, and the equities will go up, and cryptos might go down. We'll start to see them start to sort of, the word I would use is sort of uncouple, sort of decouple. They'll just start to uncorrelate, and they'll do their own thing. But right now, this has been what's driving it. So now that we can sort of, let's have a look at that. Let's go and have a look at kind of where these major levels are. So if I'm looking at euro euro dollar now. Another thing that happens is, especially in the currency markets, is we get a big move. The market is, if it's very overextended, we'll get a correction on that. And now we had the same thing here, big move down, and actually it was range bound, but then it corrected back up to here. So at the end of the day, it did approximately, let's go to there, that was like almost a 61, let's call it 60% correction on that side. And so it took a while to get there. At a minimum, it did at least a 382. So that was the minimum requirement. If that just means that the markets, the only reason I'm talking about that is it just means that the markets do tend to have that breathing out, breathing in, they tend to do it. So the 382 here lines up with an actual support level. The 50 fib beautifully also lines up with another support level. And the 618 doesn't really so much with that. Then you've got potentially the 786. But here we go, we've kind of got the 618 there. I think it's fair to say there is a fair possibility that we're going to see this correct. It could stop here. It could potentially do that. But in my experience, currencies tend to pull back a little bit more than you think they will. They don't always come back just to the immediate. That would be the earliest place where I would expect the market to reject it. Actually, this is very attractive to me. I think that this is a decent pullback for the market to come back to. And of course, it could always come back as well to this. That is as far back as it could. And what I would like you to think about for a second is, if you can remember what the sentiment of the market was when we were here, this was sort of September, a couple of months ago, so a few months ago, the dollar was just pushing and everything was pushed to its absolute extremes. If you can just remember that at that time, it was thinking unthinkable, that euro had broken below parity. And it was almost unthinkable that the euro might be able to come back up above parity. And look at where it is now. It's 1.06. It's almost back up at 1.1. It's quite far away from, it's 600 pips away above parity. And it's quite capable of going a little bit further. It could even go up 1,000 pips above that. So although parity is a very important number, what it does show you is that these swings that the markets can do can be very big. And actually, for that reason, this might very well turn out to be a big rejection of those lows and then do a big move to the upside. So this is really what I'm looking for it to do. And if the dollar, so when the dollar is the one doing the moving, then everything else is going to move around it. So that's why I'm doing the euro dollar now, really focus on the dollar. Because if we determine what the dollar is going to do, and it's going to do something, then it's likely that all the other markets will follow suit. So we can see it's kind of had a big move up here. It's struggling a little bit. There's somewhat of a little bit of a resistance level where we are now. You can see something at that level. And so we're going to see, this is where we're going to see at the first kind of level where we are now, we're going to see if the market is going to head down from here. It is a tricky thing. And every now and again, you get a fork in the road. You get an area where prices come back to where it could go either way. And it's significant because the next likely move that it's going to do, the message it's sending is quite important. So this is why this area is quite important, because if it's going to head down from here, we could see it continue all the way back down. To go back to the monthly, we could have something, for example, where it does this, comes back up and then goes down. That's why where it is now is relatively important. And so we want to, because it's still, it's arguably a downtrend, but it's very overextended. So let's compare this then with sterling. So we go compare that to sterling. Sterling has come back up into a similar area, and we can see that it's struggling right now to get, it could form that rejection. And so this is why I'm wary, because I want to see what happened. We had a very strong rejection of these lows. So because the topic of this as well is how do we manage this volatility over the Christmas period? So there's a couple of things, and I spoke about this the other night. Let's just do this quickly. There's differences in the markets over Christmas. Let's say from 23rd of December to, I don't know, 3rd of January. Give or take a day, either side. We get lower volatility generally meaning that pretty much everybody who can take a holiday takes a holiday. And so that happens. We also get holidays. Okay, we get more holidays, meaning there's bank holidays in between. And so you could get something where you get a bank holiday on a Tuesday. So the market opens on a Sunday night, and then it closes on a Monday night, and then it opens again on the Wednesday. So you get a lot more. More holidays also means wider spreads over this period, and possible gaps. Markets can start to go into a slow-mo, which I've just made that word up now, which is a slow coma, which I think is hilarious. They start going sideways. So you'll find they could be trending, and then they sort of just do this, and then suddenly January they start picking up again. So you just get a lot of that kind of thing. What else? Spreads, lower volatility, lower volumes, sorry, is also what I should have said, lower volumes. We've got a couple of those. Okay, so just something to be conscious of, and then we should either take a break, which is to recharge our batteries, okay, or if we trade, we should be even more picky, meaning there might be some markets, this is the last thing I'll type in here, there might be some markets that trend very well. And this can happen. I remember once, a couple of years ago, no, more than a couple of years ago, more than a couple of years ago, that Euro, I think it was Euro Aussie or Euro Kiwi, just started trending like crazy. And I think for about 2 weeks, it just kept going. So what could happen is it might be worthwhile looking at 4-hour time frame. So you would go to a 4-hour time frame. Let's say this one, we got a 4-hour time frame, and you want to be finding something that looks like this, or even maybe not even the 4-hour. Go to the 1 hour and start looking for stuff that just starts trending. So let's see if we can find something here. What I mean by a good looking trend. That's not bad. There we go. This isn't bad. This is the 1 hour time frame. So why do I say 1 hour time frame? I say 1 hour time frame because you will see this much over about 2-3 days. So in other words, it gets you, because we're only on holiday for like 2 weeks, and quite a few of those are holidays. You need to get a sense sooner rather than later that it's trending. And the 4 hour, you only get 4-hour bars a day, so it's going to take you a while. Whereas the 1 hour, you will get, you'll quickly see that. And so generally speaking, if it's trending up and your MACD's trending up, you should have a relatively healthy, safe trade. And if it's trending down and your MACD is trending down, you should be relatively safe. What happens, for those of you who don't know, we call this divergence, bullish divergence. You can see that as the moves here, let me describe it. So you get a move and a small pullback, big move, small pullback. Then you start getting smaller moves and deeper pullbacks. Smaller moves and deeper pullbacks like that. And so what's happening is it's slowing down the price action. And you can see that here. You can see big move, shallow pullback, big move, starts doing shallow, deep pulls, like it starts changing there. And so it started turning around, and you actually had a double bottom at that point. You had a double bottom over here. So, and all the while that MACD starts trending up, and actually the RSI. This is called bullish divergence. And we could see the earliest stages of it probably here. So it's running out of steam. Here you can see it's starting to run out of steam. It tries to go up, it's not ready yet. And then when you see the double bottom, you know for sure. So probably by here, this is it. Now you know it's there. If it breaks above that, you can start buying or looking for buyers, not just buying. So that's what's happened. But now it's going up and price is going up. This is a happy, healthy trend. Happy, happy, happy. So I like this. Oil would sit on my watch list. And it's going to sound odd, but some of these charts might not change that much over the next 2 weeks, which means the stuff we're going through now might be the best stuff over the next 2 weeks. So in other words, crude oil might be the only thing that you could trade. I would put that on your list. US oil. US oil. Actually, any oil, because it's starting to trend really well. So let's go through some of the Kiwi pairs. What about Kiwi CAD? Okay, so there we go. This is a trend to the downside. Looks pretty good. We had a good trend here. Like, that is great, guys. If you can find a trend like that on your 1 hour time frame, then that is the kind of thing I would be paying attention to. Now, as it happens, it got so overextended on the daily that it's had to have a correction. And we could have a correction down to here, at least down to there. Like, let's do the Fibonacci again. There's your 382s, your minimum requirements could come as far as a 50 or 618, which means there could be some shorting opportunities between here and here, at the very least, maybe further. So you can see we've got to that 1 hour. Now we're looking for potential shorting opportunities. So this will probably, I'll have a look tomorrow, but this will probably do a double top, probably, and go down. Because it's looking very bullish right now, but it'll probably find some resistance and then probably head back down. And we'll probably see things like this on the way down. You can see what it's doing here. Look at this. There's a move. So here's a breakthrough, retest. Comes through, breakthrough, breakthrough, retest. What does it do? Breakthrough, retest, go. So whereas now this one is coming back up. I think this is probably going to do this. Double top. So that would be if that happens, that is going to be a fantastic trading opportunity. Chances are, though, that it'll happen at like midnight. So by the time I wake up tomorrow morning, it's probably there, which is frustrating. It happens, though. So Kiwi CAD, I like the look of it. What about other CAD pairs? Because the CAD pairs have been moving like crazy. Aussie CAD not looking as good. You can see there it also had a nice little trend. What about pound CAD? Yeah, pound CAD. There we go. Some pull retracements up into this area. So remember that breakthrough, pull back up into that area, continuations. That's looking good. So these will be on my actual watch list for tomorrow. Will I trade between now and Christmas? You know what? I'm at home this holiday because I often go away, but I'm home and I have an office which is my man cave. This is my man cave. So I will probably tinker in the office, which is to say my intention is not to trade. I think it's phenomenal to take a break. I think it's crucial for me to take a break for 2 weeks away from the charts. It's so good. Otherwise, I'm going to hate the thing I love doing because this is a job and a hobby. It's a jobby. But if I'm sitting and I see something, I might maybe get in. I'm tempted. Euro CAD. See, it's not as bearish. So dollar CAD. Yeah, we'll see. Okay, so what else? CAD Swissy. Ugh. It's a mess. Okay, let's have a look at a few other things quickly. Let's look at the indices, the US indices. Okay, do you see we had a level of support here? And we're just back up at that now. So that could be, if you go to that 4 hour, we could find resistance here. So we end up going down. Could happen. All right. So I'm a little bit cautious of that. Let's see if we have a similar type of thing with S&P. It's coming back into that area as well with the Dow. We saw the Dow. Let's look at NASDAQ, tech stocks. Tech stocks, yeah, maybe, could be the case. I'm a little bit cautious of those. FTSE was doing really well. Look at it, man. Today, solid day. But the FTSE, this is where it gets super dangerous. So first of all, I don't trade the FTSE very often. Not to say I never trade it, but here's a problem. This is a problem area. This whole thing here. Oops. This whole area is a problem because it just like there's just resistance in this whole area. I'd love to see it break through there, but that's a problem. So the FTSE is not ideal for that. What about the DAX? That could be good. See, look at that potential daily candle or weekly candle setting up there. That is beautiful. It's nice and bullish. Very interesting. So that if we close to the upside here, it's going to head up to here slowly but surely over the holidays. That's pretty cool. So we're getting some interesting signals. Let's look at the Nikkei. The Nikkei is looking bearish, range bound, so we're aware of that. You know, the funny thing is when you look at stuff in a range and it's heading down to the bottom, you just feel like it's going to break out, and then it gets there and it turns around. And then when it's heading up to the top, you think, oh, it's going to break out the top, and then it gets there and it just slows down. So you really have to not ever, this is a tip, don't ever presume to think that you can tell it's going to break out, you know, when the price is over here. You really need to see how it's going to react closer to the level, because when it gets closer to the level, it starts showing you whether it's given up or whether it's still got momentum. Let's look at the ASICs. So the ASICs today also had a bit of a bullish recovery there on the weekly. This is good. This is really good, guys. Look at that. Strong day to the upside. That's great. Now, I don't know how many of you, because I was talking about this stuff 6 months ago, maybe 3 months ago, how many of you were in any webinars where I spoke about the 50 period moving average? So I've got the 10, the 20, and the 50, all right? And we're on a weekly chart. And I spoke about how we would know if the market was turning around. And one of those criteria was if that price is above the 50 period moving average, it's generally a bull market. So when it gets stuck underneath it, like it did here, it's generally bearish. And we've got above it and it's come back down and producing a nice bullish candle. The implication generally is that this is a really good sign. It's very keen to keep going. So if we look at, say, the Dow, this is the Dow, that is also broken above the 50 period moving average and produced a really nice bullish candle. So that's great. Those are good signs. Okay, let's see about the Russell 2000. It's also trying to produce a bullish weekly candle. Let's look at the Hong Kong. So out of China, so this is where there's some differences. Out of China, it was a little bit more bearish, not necessarily as bullish, but I want to see how this is looking. That's a really strong bullish for November. This is for December. We're going to see, because it's in that area, is it going to be able to push through? So that's interesting to me. Looks like it's stalling. We'll see. But China and Hong Kong stuff was way more bearish, while the rest of the markets were quite bullish. And they were bearish before as well. So let's go and have a look at some of these. So I want to have a look at cryptos. I want to have a look at some stocks. If there is something that I haven't looked at already that I've passed through, currencies or something that you want me to have a look at, please put it into the questions box and I'll go to it, okay? In the meantime, let's have a look at cryptos. So here's the thing. Cryptos are being hit hard just like tech stocks. They really are. And I was kind of giving Tesla a bit of a hard time. I was giving Tesla a hard time because Tesla is, it's down 67% from the highs. It's really not in a great state. In fact, even further, it's now 139. Yeah, it's not looking great. There's the daily candle. It's not looking great. It's starting to turn a little bit bullish here, but not enough there. Price action is a little bit overextended. I'm not convinced. Anyway, so the point was that I was giving Tesla a bit of a hard time about this, but there's a few others, like Amazon is also having a relatively bad time. But here's one of the things that's definitely happening with Amazon. You can see we've got a lower low there, and you can see actually here, you can see we're definitely starting to trend higher, and not just on the MACD, but on the RSI. So what does it mean? It means Tesla is starting to turn around. Now, it could go sideways for 3 months, but it is starting to turn around. And the confirmation will be probably when we break through that. So you've got a couple of months before, you know, it'll go till January before we'll find out. But it could be that we have a bullish January and it breaks out. It's starting to turn around. That's a really good sign. Okay, breaking above that is the next step, but also breaking through that will be a good, it probably will break straight up here past these and through this line. That's not a trend line in the traditional sense. It's just a line in the sand that basically says if you're under this line, you're bearish. Once you break above it, just the angle of bearishness is changing, and therefore it breaks through that. So that's so the point is that tech stocks have taken a beating in many respects. Not all of them, but many of them. If we look at, so let's look at a few other ones. Let's look at AMD. So AMD do, if you're not familiar with them, AMD Ryzen, so they do chips like Intel. They're a competitor of Intel's. And they're starting to really start to compete with them. But they look good. They look like they're trying to produce a higher low. Could be good. Let's look at NVIDIA. NVIDIA do graphics cards now. They're also looking okay. It's a bit of a bad rejection there. We'll see if we can do it. In order to overcome this bearishness, we're going to really need to close higher. That would just completely obliterate it. And it's rare, by the way. Let's talk about this for a second. Usually when we get a bearish rejection candle like this, it's like a death blow. Okay, look at it here. It's like this. You get that, it knocks you down. You get something like that, it knocks you down. Here we had it to knock down. If we get this and the market just ignores it and carries on up, that is phenomenal, because what that would tell me is that this was the sellers, the bears, last attempt to push down. That's their last really big attempt to push down, and there were enough buyers to just override it. That can happen. It's not very common, but it can happen. Thank you. Okay, I'll get on to silver. So the point is that cryptos, Bitcoin and Ethereum, are under pressure to the downside. They really are. And if you're a fan of cryptos, it's not about not losing hope. It's just that we have to understand that the timing of their recovery is really only going to come when the rest of the tech stocks and general stocks start to improve. So it's not a question necessarily of, it's not a question of selling. I don't think that's the case. I mean, I'm not your financial advisor. I can't advise anyone on what's the best. But, you know, Warren Buffett and Peter Lynch and a few of these others have always said that you should never sell. You should never sell when markets drop. You should either hold or you should buy, but you should never sell. And that's what they say. And so, but it's easy to start to panic if you're overly exposed on that. But in theory, there should be lights at the end of the tunnel. We should start to see that. I'd be very surprised, genuinely, if we saw equities climb and tech stocks and we didn't see cryptos climb. Cryptos are in our future. They're absolutely in our future. We're going digital. Banks are offering central bank digital currency, so it's happening. Maybe cryptos are just, you know, it's a little bit like the Wild West for now, and eventually it'll calm down and we'll see. Okay, let's go back to silver. So have a look at gold first. So gold looks great. Started to break above this area, which is good. It is now in a messy area. So if you look at it from a weekly perspective, it's actually better. This area, look how nice and smooth that was. And this was relatively nice and smooth, but this got very messy. And there's a reason for that. There's a reason this is so messy. It's messy because it was overextended, and as it comes down, there's lots of people that want to buy. So you get a ton of people buying. So it drops, goes up, then it drops a bit, goes up, drops a bit, goes up. Because every time it goes down, there's buyers that come in. And so it's incredibly reluctant to drop. There are people selling, but then there's people coming in and they buy. Then there's not enough buyers above here. And so remember that out of all the activity, as one example, all the activity occurring at this time, there are people who are buying for the long term, some people are buying for the medium term, some people are just trading it for the day or trading it for the week. And so you get to an area like this where there's not enough buyers there. And so the people that are trading it shorter term, or the people who are medium term but skittish, or anyone who gets scared, they reverse their positions, they get out or they take profit, and suddenly there's not enough. But there's not just that there's not enough buyers here. There's now the buyers that are in here are starting to exit. Not all of them, but some of them. And then sellers start coming in, and so then there's this tipping point to where it starts heading lower. And then you get this patch. So you get this horrible patch of what the hell is going on here. And so if we sort of zoom out on it, that is really my concern, is just where we are for the moment. I don't like, let's call it this area. This area is just messy there. So I'd like us to get away from this, break through this, and start. We need to retrace as well. At some point we need to do same thing again, guys. We're going to have to do a higher low, or we're going to have to do this, something like that, to get back up here. It's not in a rush to go back up right now. So that being said, that's gold. Let's look at silver, because the request was silver. Look at that. It's so rare to see silver that enthusiastic, really just super bullish. Now it is going to run out of steam at some point. It is going to at some point, but that could be up here. That could be up here. So I don't want to kind of say when, but there's definitely some major levels that I would sort of start to pay attention to. Let's just take this stuff out for now. Just delete it. Oh, yeah, there we go. So I can just see what I'm drawing and the levels I'm putting in. There's something where we are now. Probably something broadly here. Those are probably our big levels. And so, yeah, it's looking good. It's got big swings. So so this is where trade management is kind of important. Usually I would look for an entry like this, a pullback into the moving averages, nice bullish candle. That's not a super bullish one. That's not a bad one either. Entry above the high, stop loss below the low. I always take partial profits at 1-to-1. That way I bank some money, and then I usually target 3-to-1. So I would say I think we probably hit 3-to-1 on that trade. Then it comes back. There's a bit of a bullish candle here, stop loss below the low. The candle's not great, but it's there. And that probably did 2-to-1, pulls back. There's an entry. It's probably done. That's not right. Something there. It's probably got to do 2-to-1. So something like that. So there's been a lot of trading opportunities there. So if I had got in here, should I be riding it out all the way up to here in a single trade? The short answer is no. I'll make my case to you. As traders, we're not investing. It's two different things. With investing, if you don't need the money, you just leave it as long as it's growing. With trading, you don't get paid unless you bank profits. Every trade has to be closed. I know plenty of traders who go broke because they don't take profits. Not because they pick bad trades. They pick plenty of good trades. They go up, they're up 2%, up 3%, don't take any money, and it comes back and stops them out, and their account just goes backwards. They just don't take profit. So taking profits is as important as having a stop loss. And it's amazing. Once you start doing it, you just see your account grow. It's incredible. So you have to understand that the markets will go, come back, markets will go, come back. You will get multiple entry opportunities. And so actually what you want to do is not do that as a single trade. What you would really like to do, get in on that, take partial profits at 1-to-1. That one's now effectively a free trade. You can close it out to 3-to-1 if you want. There's a second trade setup that comes. You can get in on that one. Partial profits now, that's break even. Take some more profits there. That trade is still open. So this one might be closed. This one is still open. Then you get another trade opportunity, but this one is safe because you banked all the money on it. You can't lose anything on it. So now you can take another trade and so on. And so if you do it this way, you're compounding and you're making out of that, you'll make about 8%. But if you just get in here now, and then you look at where you are now, you're only up about 2.5 or 3.5%. So it's a no-brainer to actively re-enter and take so on and so forth if you can. So the other thing is, if we zoom out, this looks good. To me, this looks beautifully healthy. The MACD, look at that. This one's also looking good. Just breaking new highs the whole time. It looks fine, looks good. All of that looks pretty good. Where we are now, it would be nice to see it sort of up a little bit and go up to here. And again, what traders like to do or should do is capture profits between here and here. Then when it breaks above here and goes, you capture between there and there if you can. And actually in this case, they would have made money on a little bit of that and a little bit of that and a little bit of that. So you had multiple opportunities, because sometimes it's going to go straight up and sometimes it's going to do this, for example. So you can get a bit of that and a bit of that. You can't capture every pip. No, traders are not even trying to do it. We're just trying to capture 50 to 80% of every move if we can. If you can do that, you are just nailing it. You're doing fine. So it looks good. Bullishness overall. Gold looks nice and bullish. They look good. My only concern was whether the dollar would make a comeback. And if the dollar makes a comeback like it did before, in other words, if we go back to that euro dollar chart and we look at the monthly, if it's going to encounter resistance here and we're going to see it push down again, potentially, and it's going to be the way it was before, that's going to put pressure again across the board on everything, on equities, on currencies, on indices, on commodities. Here's why I think that's not as likely. Again, I'll make my case to you. Usually we, as a species, we panic in the beginning because it's uncertainty. Once it's been uncertain for a while, that becomes our new normal. So we calm down. It's ironic, but it is what actually happens. Right now, lots of central banks have rate hiked, and the inflation seems to be calming down. The war in Russia appears to be kind of slowing down. We're starting to get to winter, which means that energy consumption during the winter in the northern hemisphere is going to not be as much of a danger. We can also see some of those things are coming down a little bit. So all of a sudden, it's just light at the end of the tunnel. Plus, we'll get to the end of the year, and then 2023 is a new year, and we come out a little bit optimistic. These are all little funny things of habit, but all of those could lead to, and also I've seen it split. I've seen gold starting to go up and oil starting to drop, and that wasn't the case before, which means the dollar is now not necessarily driving everything exactly the way it was before. It is not the same now as it was 4 or 5 months ago, as it was in July, August, September. It's not the same. Therefore, it's not impossible that it could start resuming again, but I don't think it is. I think right now most things seem to be calming down a bit, and therefore I think it can be hard. You can be glasses half full rather than glasses half empty. Tech stocks, I don't know what to say. There's an area where sometimes I'm not qualified to speak, but like tech stocks really have taken a hit. And the one reason I had for it, my hypothesis, was that tech stocks have enjoyed the most growth over the last kind of, let's call it 8 years, 10 years. They've had way more growth than the S&P. This is COVID. Didn't even break the low yet. It was like there, and it went up. So much so that it's gone parabolic. And so I think that when that happens, it tends to come down back in line with that. And so that's a correction. And so that sort of makes sense because tech stocks overall have enjoyed the absolute most growth. It's possible that they're coming back in line with where they were overvalued. They were in a bubble. And that's a good thing. Anytime you are getting out of a bubble and you're okay, you are fantastic. And I assure you that if we were in a bubble, we definitely were in a bubble. If I go back even to here, 2019, 2020, you see some of my videos, I'm talking about we're in a bubble, and we kept going. So we're definitely getting out of the bubble and it's cooling down, it's popped, that's a good thing. And then if we compare that to the Dow, it's not the same. The Dow had a big move up, it's come back into this level, found support. Look at how quickly the buyers came in and just tipped and boom, they pushed back up. So overall, it's not terrible. And the thing is that you must understand that and I know this because I've been doing this not for decades. Somebody the other day was like, have you been doing this for like 20, 30 years? I was like, how old do you think I am? I'm in my 40s. And this is my second career. So no, I've only been doing it since 2007. But I came out of the tail end of the global financial crisis. I've seen corrections and the markets recover. And actually, I was taught that by Nick, who founded Trade with Precision. He, I don't know who taught him, but he just knew that markets will recover. So when I was like, oh, I don't think the markets are ready to recover now because we've still got this problem and this problem, and I'm listening to stuff in the news. And he was going, no, there's the chart. It's looking nice and bullish. It's recovering. And so there's always a lag. This is what I learned from him. First of all, follow the charts. If you have to choose between what you're hearing in the news and what you see on the charts, you have to go with the charts. In those situations when there's a massive conflict, you have to go with the charts. The chart's always right. Because remember that the charts represent actual orders going in, actual purchase orders going in, and physical orders being placed, not just talk, you know. And the other thing that I learned is there's a massive lag between, there's like an 6 to 8 month lag between what the chart does and what the media says. What I mean by that is, you know, it's at its most bearish and pessimistic here, and it takes like 4 or 5 months and it's up here. Then the media starts, maybe, okay, maybe things aren't so bad, maybe we're starting to recover, but it's not immediately correlated. It doesn't start picking up here because COVID numbers are suddenly under control. It doesn't do that. It tends to assess, the market just tends to be ahead of most things. So that's just something to be aware of. Okay, we've got 12 minutes, believe it or not, because we've gone through this. So let's have a look. What do I like in terms of trading opportunities over the coming weeks? So let's go to the daily. I'm a little bit concerned about this. This is exhaustion. That's not a good sign. We could very well have a bit of a correction. The MACD is flat, the RSI is flat. That's not a bad thing. That just means there's not much momentum, but it's not losing. It's not dead. It's not bearish momentum. It's just, yeah. So we could have what could happen is we could see it come back down to here and then carry on up. That's a possibility. I would probably this is not advice to you guys. It's for me. I'll probably stay away from it. This is now a downtrend, started to break through these lows. It's a weekly retracement. So as soon as you see a trend like this going to a downtrend on the higher time frame, which is multiple time frame analysis, that's a retracement. So as soon as I see a downtrend on the daily, it means the weekly is retracing, which it is. Here we go. So there's your move up, there's your beautiful bearish candle, and there's your retracement. And it's almost certainly coming back down to here. Doesn't have to, but that would make sense. That would be a really nice place for it to come back to, and then hopefully carry on. So for me, and that's a week, that's a couple of weekly candles. So I think it's fair to say that possibly for the next week or more, excuse me, my nose is itchy, we will see sterling come back down towards these levels here. There, that's a really nice place for it to come back to. Yeah, come back down to that. Could it go a bit further? Possibly, but I think that's a really good play. I think that's beautiful. Look how it's underneath the 50-period moving average here, and then it manages to get above it, and then it'll probably collide with the 50-period moving average here and turn around. So that's what I'm looking for there. Aussie dollar. Aussie dollar is also starting to edge lower, probably coming back down to here. Kiwi dollar is, you know, has been very bullish. Needs to have a bit of a correction. Look at that weekly retracement. Where could that come down to? Somewhere there, not far, I don't think. Dollar yen, for me, dollar yen is great because we have got a level of support here, to be fair, but I think they're very keen on having it continue down. So what I'm looking for this week is to see if it finds some resistance in these areas and then continue down. I would keep an eye on how the week closes, because if the week closes really bullishly, we might have a double bottom and then it's going to carry on up. But again, that's only if that US makes a sudden comeback. I think we're probably going to see it come up and then head down. So the 4 hour is going to be a great place to watch. It's like here, you can see it's already struggling and actually might want to head down from here. Alternatively, back into sort of this area. But that's good. So I like all of the yen pairs for that weakness. Pound yen, same thing. Trend continuations, euro yen, trend continuations to the downside for now. Could I be wrong? Could it just start going all the way back up? It could, but you know, we've really got some attempt to have a weekly downtrend, and therefore for the next weekly candle, I would expect it to keep going. It's overvalued on the monthly as well in many cases, so there should be room for this to have a deeper correction. Like dollar yen should be able to come maybe back down towards here, or possibly even down to about here. Again, I think it's got the potential to come back a little bit further. Therefore, if that's going to be the case, other yen pairs are going to have bigger corrections as well. Swiss yen all the way down, CAD yen a little bit further as well, Aussie yen maybe a bit further. I would go for the ones that are the most overextended because they potentially have the biggest correction. So I do think there's something there with some of those yen pairs and some of those CAD pairs as well. As I said, Euro CAD, nice little correction to the downside, that weekly retracement starting. If that corrects, where could it go? It's very overextended. How far could it fall? Well, back down even towards here maybe. Could come back down quite a bit. It'll probably just come back to here first. And again, you want to make sure you're taking profits as it approaches these levels because you want to capture that. Pound CAD, same thing again, back down to here. Yeah, so CAD pairs, what do we say? Kiwi CAD, a few of those CAD pairs as well. Gold and silver looking good, nice and bullish there. We've got crude oils, also got some opportunities. So there's definitely some stuff happening on these. So crude oil has a weekly, there was some strong resistance there, and it's a weekly downtrend. Lower highs, lower lows. Go to the daily, it's now in a daily uptrend. So I said that a daily change of trend is a weekly retracement, which it is. So this is a weekly retracement back up. And so the question for this is really, where's it going to go? I mean, these kind of areas make the most sense, probably into this area here. We'll see if it can go further than this. So there's definitely shorter term opportunities on these as they approach those levels. And then we looked at the US indices, which we've spoken about now. They have similar issues. Are they going to be able to push past them? It is interesting because, as I said, the DAX looks really bullish. The FTSE looks really bullish. A lot of them look good to go. They look good, keen to hit higher. Then we looked at the individual. So then we look at cryptos. And now we're really looking at individual stocks. We're looking at, say, Costco, which doesn't look great. Let's go through these. Apple. Apple's sitting at a very major support level. Very major support level. If that breaks down, it's going to drop a lot. It's going to go down possibly to 110, 100, which for me, I don't mind. There's a good buying opportunity as well. So right now, if you're an investor, if you have spare cash, now is a great time from an investing perspective, to certainly start shopping. Like it's the cheapest, like it's the lowest I've seen some stocks, Amazon, Apple, all those ones in a long time. Doesn't mean I have to put every penny I have into them, but I could put, a couple of grand into those, for me anyway. Microsoft looking good. Get that weekly perspective. Let's see what happens with that. I want to see what happens from a monthly perspective. That's a really, really nice bullish candle off the level of support. Should be enough to push it back up, but we'll see. We have Tesla. Tesla again is its own problem. Berkshire Hathaway looking very nice and bullish. This has got a really nice break and a retest weekly candle. A lot of charts are worth your while looking at the weekly candle, because if we get bullish weekly candles, so what we're looking at is this. This is the logic. Price battles with resistance, battles with it, breaks it, comes back, retests it, and then does this. And we're looking at that. So how do I trade it? Well, I mean, there's multiple ways. But wherever I see that in all these charts, and if we get that by Friday, which is not that far away, that means that next week when we're on holiday, a lot of those could continue up high if the markets are feeling like moving. Doesn't look right. Amazon's looking super bearish. Amazon, I believe, has corrected the most, or has crashed the most, or whatever you want to call it, out of everything, followed by Tesla. Walmart, there's a resistance level support, so that could be a move up. Depends if you want to trade those things. AMD, it's a higher low potentially. It's not the same thing. Metaverse, is that Meta? Yeah. Facebook. Whew. Google, I'm not sure. I like Google. I mean, I like Google. I put money in Google. I put money in Apple. I don't think I put money in Meta. I don't like Facebook, and very few people I know like Facebook now. I loved it before, but it's so far it's become such a monster compared to what it used to be. It just isn't what it was. It really isn't what it was before, I don't think. What's this? Oh, Intel. Yeah, Intel chips. Nvidia, looking better. That's a little bit better. And then you had a few of the others. So so there's a few different ones there. I do think there's some good stuff, but usually what I would do in this period is if the market starts getting a bit sleepy, I'd find out when are the bank holidays, when's the platform going to be closed, because when it's closed, I want to make sure that I bank those profits. And if for example, let's say it's a Wednesday and the Thursday is a holiday, just close them out. Just bang and get some, because eventually it just gets a bit sluggish, and I would rather have that safety. And we'll see how it goes. So folks, there we are. We have come to the end. I hope you found that instructive and useful. I was going to say thank you very much for your time. As always, I appreciate it. I love there weren't a lot of questions, but I like those. This was a surprise. I was asked to take over tonight, so I thought that my last one that I was doing for IC Markets for the year was on Monday or something, but this is my last one. So I don't think I'm going to see you guys until the New Year's. And I really want to wish you I hope you're having a holiday. I hope you get to spend your time with loved ones. I hope you get some nice gifts, good books or whatever, and have a break. Just have a rest and just recharge your batteries. And of course, I wish you the best in 2023. I look forward to seeing you when we all get back, if I don't see you before then. And just to say, look, to wrap this up as well, make sure you're following these guys on social media, IC Markets on social media. And also, if you have any questions to do with your account or the platform, don't hesitate to get in touch with the good guys at guys and girls at IC Markets. Okay. And that's it. So thank you very much, Godwin. Look after yourself. God bless you guys. And I will see you all the best, and I will see you in the new year. Thank you very much.